Greetings traders, Jason here with SwingHigh.com. I've got a lot to cover, so I'm going to move fast. It is Wednesday, December 9th, 2009, and this is your post-market analysis. For your halftime report, I was talking about how there were a couple indications that stocks could head higher to finish out the day. I talked about gold being up at the time, which it was, the dollar showing weakness, and the VIX dropping. So what we got pretty much was a double bottom type formation and a strong finish into the close. In fact, on SPY we broke above the 110 mark, which is significant to see it break above that resistance into the close. So SPY up 0.37%, the diamonds up 0.5%, the NASDAQ up 1%, the financials up 0.35%, and the Russells down 0.3%. So definitely some relative weakness on the Russells, but most major stocks and other leaders were up today. The tick definitely started sort of bearish and then drifted bullish throughout the day. The Trin actually was bullish in the morning and then came more into the neutral range between 0.8 and 1.2 to finish out the day, which is a little strange to see that. I'm actually going to take a look at the Trin Q to see if that corroborated, and no, it did not. The Trin Q definitely drifted more into bullish territory throughout the day, so that definitely showed some strength there. VIX. The VIX, wow. We have it's sort of a symmetrical triangle here that broke down. Even if you want to just focus on this lower trend line that I'm about to put in here, bam. Just that lower trend line alone was the most important part. It broke down below that and then just fell out of bed from there. Down 4.35% on the VIX, so definitely a very bullish sentiment read on the VIX as fear leaves the markets. I want to look at the broader time frame of the S&P. As you can see, for the past month now, since November 10th, we've been stuck in this range here on the S&P, a very, very solid range, if you will, between 1085 and 111.20. We've been stuck in this range here, and that basically is a high base formation. It's a little choppy, a little wide. There's definitely a big range for that high base. So it's not the tightest consolidation I've ever seen, but it definitely is still a high base, and today proved that we are still holding up inside that high base, at least for now. A break above 1120, and I'm not going to have much choice but to want to go long this market. And actually, I've not wanted to go short for the past month, at least. I sold out of my positions back early, around, I guess, November 15th, middle of November. I got out of my major positions and just been sitting on my hands waiting for this to resolve in one direction or the other. So as long as we're in this high base, I will not trade, at least not swing trade. I might day trade, but I doubt that, because swing trading is more my cup of tea. Anyway, I want to look at some of the leading stocks today. Apple popped 4.18%. It's a nice pop in Apple. We have this downtrend here. I'm sorry, that was a little weak. We have this downtrend here, and there are a couple ways to draw it, but we are about to break out of it, if not already breaking out right now of that downtrend. It's just a down leg, it's not a downtrend necessarily, a small downtrend, if you will. About to break out on OK volume. Goldman Sachs, same sort of picture, and finished strong today. And RIM, also up about 5% today. Definitely not the same picture, but there's some things we can do with that. I can talk about that another time if you'd like. So look out for the news tomorrow. There's a couple things coming out. Check your Bloomberg economic calendar. Thanks for being a part of SwingHigh.com. I'll talk to you later.